तो काय होतो आता? नमस्ते. We'll wait for a few more minutes to see if some people are joining. Hello. So today I wanted to discuss about how to invest in international funds, international stock markets. Hey, Varun. Okay, so now I'm still waiting for a few people to join. Okay, so I guess only the flight guy and Avinash Gokhale are present. Okay. So basically, today we are here to discuss how to invest in international markets. Now, diversification is the key to investing or having a healthy portfolio. How do you diversify your portfolio? One way to do it is by going into international markets. Now, before we start about how to invest in international markets, one thing that we must know is the difference between diversification and asset allocation. Now, what is asset allocation? It basically is uh, investing in different kinds of assets. What is diversification? Diversification is having different investments in the same asset class. Right now, so basically, what happens is when you want to diversify your portfolio, like if you have invested in equities in India, looking for equities in some other country will give you the required diversification to mitigate the risk and volatility of just investing in one particular market. Right now, how do you invest in foreign markets? There are various ways of doing that. What ways? See, there are three, four ways in which you can invest in foreign markets. One of it is by investing through mutual funds. The second way is by investing in direct stocks of foreign companies. The third way is by going through the NSC IFSC, the which is the International Stock Exchange, which has started at Gift City in Gujarat, and directly investing in stocks can be either through local brokers or international brokers. Now, I'm just waiting for a few people to join so that we can start. If anybody, I can you please reply to in chat so that I can start. Basically, see, while investing in international markets, we do not know the regulations, we do not know the economy as such, but we do know of companies like Apple, Amazon, Microsoft, Tesla, and the likes. And we've heard about it and how big the companies are and the kind of business that the companies do, right? And while investing, while thinking of investing in those companies should be a good prospect of diversification. How do you do that? How do you go about investing in those companies is a big question, right? So can't see people. I guess my internet connection is a bit slow or something. No. See, basically, while investing through mutual funds, what happens is many mutual fund houses in India have international funds which help you diversify your portfolio by lowering your risk. Right now, here, one thing that needs to be understood is international funds in international while investing in international funds, there is this lag, or there is this problem which international mutual funds are currently facing. Why? Because of a cap laid down by RBI for the mutual fund industry as a whole. So you cannot invest, the mutual fund industry has put a cap on investing in international funds. Why? Because RBI has put in place a $7 billion cap, above which all mutual funds taken together cannot invest in international markets. Now that limit is fast going to reach, and that is the reason why mutual fund houses have stopped taking fresh investments for their international funds. Now, one thing that we should know here is, uh, for any international funds, either the mutual fund house has funds which directly invests in stocks of foreign companies, or they have ETFs, exchange traded funds, which invest in which are traded on the stock exchanges, or on foreign stock exchanges, or they have something called as fund of funds, where hello. Right. Now, what I was talking about is how to invest in foreign funds. Yogi, if you are listening to me, please give me a hi or something. I don't know if I have a stable internet connection. Okay, so what I was basically talking about is, while investing in foreign markets, mutual fund is the safest way of investing in foreign markets. Why? Because again, they are professionally managed, and follow up about economies in the world economies in general can be better done by them rather than we singly doing it, right? But as I was telling you, there is a cap in the mutual fund industry which is fast approaching. There is a cap laid down by RBI which has put a upper limit of $7 billion, above which funds cannot be invested in international markets, right? So that cap is for the whole mutual fund industry as a whole, and that is the reason why mutual fund houses have stopped taking new subscriptions for their international funds. Now, one thing that we should know here is, $7 billion cap is for the whole mutual fund industry. For individual fund houses, the cap is of $1 billion, and there is a separate cap of $1 billion for exchange traded funds, right? So where mutual funds are have stopped taking new subscriptions for their international funds, you can still invest in ETFs, exchange traded funds of these mutual fund houses, which are basically passive investment style, and you can still invest in ETFs in foreign markets, right? So any fund which is directly investing in foreign stocks has stopped taking subscription. Why? Because that $7 billion limit set by RBI is fast approaching. But you can still invest in ETFs of mutual funds, which have a separate cap of $1 billion, right? If you have any queries, please type it so that I can answer the queries as we speak. Now, mutual fund, as I told you, is one of the safest ways of investing in international markets. One more way, if you don't want to go through the mutual fund route, is directly investing in stocks. Now, how do you do that? A share like, say, Amazon or Apple is traded somewhere around $3,000. Say a Google, for example, Alphabet share, it is traded for somewhere around $3,000 to $4,000 per share. Now, the kind of money that you will need to buy a single share is huge, right? So what is the way out? Do you how can you invest in these foreign company shares? Well, first of all, fractional trading is allowed in US stock markets. Now, what is fractional trading? You can invest in a fraction of the whole share of the company. So you can buy, say, a 1/10 of Google or a Tesla share, and you can start from as low as 100 rupees while investing in US stock markets. So it is very, very easy to invest directly also in stock markets. What will you need? You will either need to open an account with an Indian broker who has a tie up with a foreign broker, or you can open an account with a foreign broker directly, right? So what you need to keep in mind here is FEMA, Foreign Exchange Management Act, and RBI have laid down a limit of $250,000 per year, up to which you as an individual can invest in foreign companies stocks, right? Which can be in the US or anywhere else, or say on a London stock exchange or a Japanese stock exchange. You can trade or invest in anywhere in the world up to that limit of $250,000 per year. Now, this limit is set by FEMA and RBI. Correct? There are various permissions that you will have to take and various paperwork that will have to be done, which is quite tedious. So, as I told you earlier, mutual fund is a easier way out. Why? Because you don't have that upper limit of $250,000 to invest, and you can start investing in mutual funds for from as low as rupees 500. Correct? Now, one more way of investing in foreign companies is the newly started international foreign exchange in India. Now, this is started by NSE, National Stock Exchange, and this Foreign Services Center is operational in the Gift City in Gujarat. Now, what happens when you invest through this international financial services exchange is basically you will have to open a separate demat and trading account with brokers who are registered with that stock exchange in Gift City in Gujarat. So you cannot go through your normal broker route. You will have to specifically register with brokers who are registered on that stock exchange. Correct? Secondly, what you will have to do is you will have to transfer money from your account to the broker's account who is registered with that IFSC NSE stock exchange. Once your money is credited in the broker's account, broker will buy shares on your behalf. The NSE will buy shares, say in a US market. If you want to buy, say, an Apple or an Amazon, that stock exchange will buy the shares on your behalf. What will happen is those shares in the US market will not get directly credited in your account. NSE IFSC will issue you underlying securities for those shares. So they are kind of derivatives which NSE IFSC will issue you and credit to your demat account. So you will not get shares or a fraction of shares, you will get an underlying investment product of those shares from the stock exchange. Any Okay, should we invest in Tesla stocks? Yogi, see, what will happen is if you are interested in a particular stock, before investing in the stock, please look at the basics of that company. Just because Tesla is doing great business with electronic cars, or it is the way forward for the future of transportation, very definitely, but what is happening around us right now and what implications it is going to have on a particular stock should also be taken into consideration. Now, I will not be able to give you specific stock recommendations here, but what I want to tell you is how you should approach investing. Now, say when it comes to electric vehicles, nickel is one of the component which is very very essential in the lithium ion batteries which are part of any electric vehicles. Now, if you have followed the news about nickel, the rate prices of nickel have risen more than double in the last 1 year. Secondly, who is the major supplier of nickel to the world? Russia. Now, with Ukraine crisis and the sanctions that are laid down on Russia, you can clearly understand what is going to happen to the supply chain of nickel. And with the prices zooming to more than 100% rise in the last 1 year, how are they going to affect the pricing of these electric vehicles is also a question that needs to be kept in mind. Correct? So instead of focusing only on the brand name and the people behind the company, you should be able to understand what geographical or geopolitical implications it will have on a particular stock. What I suggest is, if you have not invested in any foreign stocks earlier or before this, I suggest you go through the mutual fund route, because that is the safest way to expose yourself to a market which you have not, which probably is new to you and you don't know the nitty gritties of the market. So to start investing, I would definitely suggest you to go through the mutual fund way. I hope it answers your query, Yogi. Right, with see, what happens basically is, if you go through the mutual fund way, it will not only expose you to say a singular Tesla stock, but it will expose you to stocks in that particular sector. Now, there are various mutual funds available in the market which concentrate on the Nifty 100 stocks. So you'll have a whole basket of stocks which form part of the Nifty 100 uh, average. Correct? Like we have a Sensex fund which is specifically targeted for a Sensex or a Nifty. If you go in for a fund which is targeted for the average of a foreign stock exchange, you will get a whole basket which will include a Tesla. Along with that, stocks like Apple, or say a Meta platform stock, or Amazon, Microsoft. So you will get a whole basket of companies which are performing well, instead of only purchasing one single stock. Correct? Now, what I wanted to bring forth here is, after RBI had set this restriction, SEBI had asked many mutual funds to stop taking fresh subscriptions in their international fund. Now, Parag Parekh Mutual Fund, is a very well-known fund, and one of their funds, the Flexi Cap Fund, has a good exposure in foreign stock markets, where say nearly 65% of their portfolio is invested in equity or equity related securities, and they have not segregated any sector as such, wherein they will keep on investing, or whether they will not invest in foreign stocks and they will only invest in domestic equity companies. So Parag Parekh Flexi Cap Fund had stopped taking investments in their fund. Why? Because they had a foreign exposure, and what they had suggested people is, instead of investing in that Parag Parekh Flexi Cap Fund, they invest in the ELSS scheme, the equity linked savings scheme, which will give dual advantage of tax benefit as well as equity kind of returns. Why? Because of the longer time duration that they expect investors to be invested in those stocks. But 2 days back, they have again removed the restriction on the Parag Parekh Flexi Cap Fund and have started taking fresh subscriptions in the fund. And what they have said is, since they have not jotted down any specific segregation for foreign stocks and Indian stocks, right now they will be investing in Indian stock markets. And as and when the limit is increased by RBI, they will again resort to say, investing in foreign companies, right? Anyone else, if you have any question, I will be happy to help you with it. See, DSP came up with a good fund, global investment fund, wherein they were going to invest in not only US markets but markets across the country. You have some funds which are specifically targeted for Chinese companies. There are very good Chinese companies, say like Tencent and the likes, Alibaba and Group, right? So there are specific stocks, mutual funds which are targeted to Chinese companies as well. So I think that is the way forward. That is how you should be approaching international markets. Why? Because singularly, it will not be possible for us to understand the implications of government regulations and geographical policies that happen. No, there is no need to boycott Chinese stocks, Yogi. I don't don't agree with you there, because see, if those companies have holdings in India, we very much can have holdings in Chinese companies, correct? So it's plain business. That's what I would say. Correct. So coming to taxation of how your international investments will be taxed, I wanted to clarify that taxation for mutual funds and taxation for direct stock investments are different. So, what we should understand here is, if you invest in an international mutual fund, it will be taxed as a debt mutual fund is taxed in India. So, what does that mean? It basically means that if you hold an international mutual fund for 3 years or less, so a period lesser than 3 years, you will be taxed at the short term capital gains tax, which will be according to your tax slab. Now, if you hold a mutual fund for a period more than 3 years, what is going to happen is you will be taxed at long term capital gains taxes. So, what are those taxes? It will be 20% with indexation benefit. Now, if you invest directly in stocks, if you directly invest in shares, you will be taxed at short term capital gains if you hold the shares for a period of 2 years and less. Again, the short term capital gains tax will be your tax slab, the tax slab applicable for your income. Long term capital gains tax will be charged to you if you hold that security for a period of more than 2 years. Correct? So, for mutual funds, the period is 3 years or less for short term. For stocks, the period is 2 years or less for short term. This should be kept in mind. And long term capital gains tax in both the cases is 20% with indexation benefit. correct? So that also is one aspect which you should keep in mind. Now, while investing in mutual funds, most of the funds either are fund of funds, in the sense one mutual fund in India is investing in another mutual fund of a foreign company. Now here what you have to take into consideration is, if you are investing in a fund of fund, the expense ratio is going to be on a higher side, a bit higher side. Why? Because the Indian fund will charge its expense ratio to you, as well as the foreign fund in which the Indian fund is investing will also have certain percentage of expenses passed on to you. So even though the expense ratio is a bit on a higher side, I would still suggest you go in the mutual fund way if you are planning to invest in international stocks. Right, Yogi, do you have any other question? Please type and I'll be happy to help. Which stocks to buy international? See, basically, what I would suggest is go before you think of buying an international stock. I would suggest that you go through the investments of these international mutual funds. Check out the kind of investments that they have done, the kind of stocks that they hold in their portfolio, by because it becomes a quick and easy guide for you to start investing in international funds. Now there are so many companies abroad who have huge market caps, but before you invest you have to check out for these 2 3 points. Like, don't just go in for the valuation that the company has and how big the value the company is valued at. Check out if the company has free reserves. What are the cash reserves with the company? Check out profitability of the company. Now we have seen many IPOs in India, and the fate that the prices of those IPOs are having after they are listed on the market. Many of such startup IPOs were not even profit making. So it is a very basic condition that if you are investing in a stock market, just check for the history, the profit history of the company and the kind of profit it has made in the last 3 to 4 years. Don't ignore all this. Just don't go by the hype the company has. Correct? Now, if you see a company like Netflix, the company has posted meager results, in the sense their performance has gone down if you check their results in the last quarter. Now, would you go in for such a company? Is this company like, does this company have a foreseeable future? Is something that you should be checking. You should read about it and then think of investing. There are companies which build value for their investors, right? A company like Apple, which is more about uh, customer experience and less about the kind of products they bring to the market. Right now, if you have a customer centric company, then that is definitely going to have a bright future. Correct? Say a company like Facebook, the metaverse platform. Now it has taken a lot of beating. Why? Because people are unsure about how the company is going to operate, and the areas or where metaverse is going to affect us, or how it can change or add value to the lives of people. Correct? Now people are a little skeptical about this, and it has taken a beating in the stock market. So while choosing shares for international shares for investment, keep these things in mind. Look out for the profitability of the company. Check out the free cash reserves of the company. Check out the prospects of the company. The geopolitical situations are fast changing, and does will it have any effect on those stocks? Think on those lines and then decide to invest in international stocks. Right? Did that answer your query, Yogi? Anyone has any other question? Otherwise, then we'll end this stream today. Okay, so I guess we will end this stream today, and let me know if you want to discuss about any other topic which we can take up next Friday, and just message me or let me know any topic that you want to know about, or you think it needs to be discussed, and we will take that topic in a live session next Friday. I will be taking up live sessions every Friday at 9 p.m. India time, and would be happy to help you in your investment journey, right? So see you. Namaste, Yogi. Namaste. Right. So see you. Good night. Bye.